All right, GU is the pair. Where is GU? This is GU. Okay, let's go. Let's go, GU. Let's go. Clear up all this. Start with an H1 real quick. Admit the new guys. And let's go ranges. There we go. So that's a range. Stop point below the range low. It's just not behaving. Range low, which means that is our opposing liquidity run, which means this is our failure swing, which means our liquidity objective is above here, somewhere to the left, which means it was or is probably somewhere in here. These are all relative. I'm using pure hindsight right now. Peg this high. I'm just going to tag it to this, my H1. So if we are to believe, still kind of like this one though. If we are to believe that GU is trading higher, there's a couple of things that we have to be aware of right now for the GU folks. Not addicted to trading view, just indulging. So if we have opposing liquidity run right here below this low, that automatically makes that our dealing range, which means for today and also today's last day of the week, if I was trading GU, my focus would be on, can we get a retracement in discount of this dealing range? Discount of this dealing range is right here. Right at discount, we have lovely fair value gap showing up for work. So if I was trading GU, I would be looking at something along the lines of maybe deep discount. That gets there. And then that would have been my trade plans for GU today if I was trading GU. Why wouldn't the next higher high, next higher swing low be the new dealing range? Let's see. Next higher low is this. Why wouldn't this be the dealing range? That's a good question. Based on your model, it could be, but for my model, let's get some mechanics down. So we have bam, 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 bam. That's my model. Old low, failure swing liquidity, opposing liquidity run, trade entry, which makes sell side sweep, buy side sweep, my dealing range. So I stock that, overlapping confluence, boom. There we go, nice and clear. All right, that's H1 charts. Let's jump to a 1 minute chart, play around with GU, and we'll move on to something else. So 1 minute. 1 minute time frame, what do we look for? Daily range, session range. Nothing else to do on a 1 minute chart if you already have your time frames framed out. I don't start trading before 8, so 8 AM open is always super important for my model. It might mean absolutely nothing for you, but for my model, it is important. So what do we have here? Where's the last time that a low was broken? Before 8 a.m., it would have been this guy right here. Let's pull that all the way out. I'm going to be dropping a whole lot of subtle hints today. Retracement target if price starts to trade higher. 8 a.m. open is right here. So since we are currently starting our trading day, no, important highs and lows would be here. 8 a.m. ran that low. So same idea. This is now like a lens to view price action. This would have been our opposing liquidity run. This would have been our failure swing, that high, which means our dealing range, if you're following from the H1, would have been here. So retracement ideas somewhere inside here. But we all know that a fib has no magic. So confluence around 50% comes in at this guy here. So if I was looking at this before I started the call, I'd be looking for long positions, something like, I like the discount under the fair value gap, up to, could aim for the full imbalance fill, or even the relatively equal highs here. Stops placement would be these 3 candles create the fair value gap. So candle 1, 2, and 3. This is not financial advice. This is my personal rule. So if we have candle 1, 2, and 3, and this right here is a fair value gap, and I'm framing a trade off that fair value gap, my stop goes that candle's low. Nice and easy, Charlie. Nice and easy. So this trade would look something like that. Right there. There we go. First targets. Why not the order block and FVG below in discount? Good question. So here's our dealing range. Here's our order block. Well, here's what you're referring to as an order block. This is not an order block for me. This is just a down candle and that's just an up move. That's not an order block. The definition of institutional buying is that they buy sell stops and they sell to buy stops. If this is an order block, where's the sell stops that they bought right here? I don't see any, which makes this not an order block. That alone right there is enough to trade to change a whole lot of your trading plan. But that's all I'll say. I'll leave this for 9:30. So time and price. Couple of the seconds or minutes. See if we get that hit. That was a whole lot. I'll repeat it again. If we believe smart money, air quotes, buy sell stops and sell to buy stops, why would we think this down candle before this up move is an order block if there was no sell stops here being bought? If the imbalance fails, is this trade still valid? That's a good question, and I would say, why is that important? If my trade is to get from here to here, and it gets to, I don't know, maybe really close, because this is a 11-hour trade, right? So be realistic. Unless you're trying to post a screenshot to say, hey, 11-hour trade, if you slap 0.5% on this, and this is running 10-hour, 5%, and I scale out 4%, I don't care if this hits TP. I could care less if this hits TP. That's the they're all on my YouTube channel. Yeah, that's the ego coming out, right? There's a trade setup and then there's a trade. Big difference. The trade setup is based on this price action right here. I believe it's very likely that the next move in price, if we were right here, is going to be higher. And I believe it should start in that imbalance and it should trade to here. That's the trade setup. Now the trade now is going to be, I'm only going to enter here if we retrace after taking this guy inside here without closing below the low. That's my trade setup. That's executable. That's what I'd be looking for. So when you're in the trade now, we have trade management that we have to play out. We're no longer interested in where's the target, where's the objective once you're inside the trade. Nobody does that. You already frame where your target is. It's all about management. So which is why I'm saying, realistically, this is an 11-hour trade. I don't care about RRs, but this is a nice setup. If you have 1% on, and this is running right now, which is, I don't know, this is probably about 8-9R. This would have been 9%. If you open that phone and you see 9% running, and you leave 9% running because you want 11%, you have a problem. You have a problem. And it's a delicate balance. So I don't want to offend anybody. It's a delicate balance, right? Most persons will say, don't watch the money, pay attention to the price action. But I'm going to say, preserve your capital, preserve your mental energy. If this was a challenge and you need maybe 8-9% to pass and you're up 8-9% here, are you going to squeeze for that 11%? No way in hell. No way in hell. You got what you went for and then you're left. Don't close candle highlighted in gray boxes is order block. Yes, it's not my order block. It's what I would use based on the definition of order block that I stick to. Why? Sell side liquidity below here. All that sweeping sell side liquidity, then displacement above it. If I was around and the trading GU, that part is important, I'd be buying this. Where's my stop? My stop logically goes below the order block. Depending on the pair, order block plus spreads. My target would have been buy side liquidity above here for first partials. And then as usual, objective would have been here. And I would be scaling in right here as well. So maybe about 70% off when we're expanding through here, not when we're retracing in here, right? When we're expanding through here, I'm taking mine, waiting for it to retrace and then saying, oh, let me just take it since it's retracing. Bad habit, very bad habit. It teaches you to be hopeful until price starts going against you, instead of having a mechanical approach that says, this is what I saw when I was right here. I'm not expecting a retracement, but I'm expecting it to trade through here. So when it's trading through here, partial out right here, game over. Allow this. Don't be fighting this thinking, should I go short? Should I buy? No. Wait for the highs to form inside here. Frame your dealing range. So if you're looking at this live, let me take this trade thing off. This would have been the first thing I'm expecting for my dealing range. So at 50%, no imbalance right there, right? But I can see this imbalance above here. So my mind would be saying, let's look to see if price can draw back to this imbalance, create an order block, then push. And I said, create an order block here and then push. So it sounds a little bit simplistic, but let's put them together. The last thing I said earlier was that order blocks form a liquidity pool. So if we have an imbalance right here, which is roughly close to 50% of the range, which makes it fair value for buying, and we got displacement through, and I'm anticipating an order block to form inside here, automatically I expect lows to form above there based on my definition of order blocks, because now I'm expecting sell side liquidity to pool, order block to form, displacement. So I did there. That's how you blend the rules to your models, and that's how you walk away from a trade setup if it doesn't fit your model. Doesn't matter how good it looks. But that's it for GU. Nothing more to talk about here. Doesn't matter what this does now. Win or lose, that's the plan. Stop loss, take profit. Again, it would be up something here, so no sleep loss. Gold next. Gold is the next suggestion. Do I have gold on? I do. Same process. H1. Bam. Clear all joins. Reset the chart. So it goes there. So H1 range. Are you not looking to short AU at H4 plus H4? Me? I'm not looking at anything right now. Next week is options expiry week. Wednesday to Friday, I'm expecting insane volatility. That's when I'm going to be trading. So ranges. Lowest low. Did that raid sell stops? I don't see any. Highs inside here. Housing liquidity. And imbalance. Buy side liquidity. Order blocks should form there if we're bearish. Fireworks on M1. We're getting there. We're getting there. We're getting there. We're getting there. Moving this out to the way. So now we have a range delivered higher. So this is buy side delivery. Every low that didn't take this becomes a failure swing. In particular, if we have a higher low like this, I'm expecting liquidity here. I'm expecting liquidity here. This low was around here. Order blocks, displacement. Now here's a fun fact. If this is the low, right? Before all of this down move, this right here was the low. So if we have down close candles or consecutive down close candles that start running lower here to get below here, that's when you can start filtering to say all of the consecutive down close candles here become your order block and not just the last one. There's a liquidity. This is accumulation. Opening price of this guy here becomes very important. That's all I'll say. There's your run up. So if we're sticking to the logic from what we started with at the beginning of the call, that right there is your dealing range. Dealing range formed, we anticipate retracement to discount. Where's discount? Here. What do we have at discount? Imbalance. So remember what we were saying a couple minutes earlier. Imbalance through the high, dealing range, anticipate that pushback. There's going to be lows above here. No, there's no lows. These are all the candles. These are all the lows. All the lows. Swept, order block, boom. Straight to liquidity. Now we hop to 1 minute. And first thing I need is my 8 a.m. opening price right here. There. Liquidity. Relatively equal highs here. Swept. This is running on sell side right now. Right now, this move, all of this move right here is running on sell side. So where's the sell side liquidity? On this time frame, I don't see it. Unless you have to zoom like all of this to see where sell side liquidity is resting, all the way down here. So if this is a run on sell side liquidity, it means retracements and then lower. I wouldn't be looking for longs inside here for a lot of reasons. So let me get real specific. This right here, that low right there at 9:07 a.m. is the last pool of sell side liquidity. If this guy, if we don't get bullish order blocks being formed right here and validated, this guy is trading low. So you start watching the down close candles start trading through this low, all the way up to here. Do we have any candles trading back above this? Nope, which means they're not buying. So if they're not buying here, why am I going to buy? Why am I going to try to pick this bottom if they are not buying and I can't move the markets? So we chill, we zoom out, look at the higher time frame, look for your higher time frame sell side liquidity pool, and you get in line with the order flow. Nice and easy. If this trades to sell side liquidity and starts to push, and this becomes the first area of buy side liquidity to expect markets to trade to. This right here. Someone in the chat. So nothing more to talk about gold because it's already moving. There is no setup right here unless you're stocking short setups. But where was buy side taken? This was the last high that was rated. There's no retracements or no buy side delivery coming back here. So I'm not expecting this to happen. I'm expecting continued lower move. Someone says NAS. All right, let's grab NAS next. I have 2 feeds for NAS. Let's grab this one here. As usual, same process, no deviations. Oh, I think I was probably doing a one-on-one with this. So let me get those off. Bam. What's in the chat? All the FVG IDM model. IDM. I know what IDM means, but yeah. Sell side liquidity pool. Lows. Swept. So what's this? What's these down candles below here? Buy side liquidity pool. Right here. So same idea again. We have accumulation, failure, swing, opposing liquidity run, which means my dealing range gets formed when we trade above this high. I think we did this on Wednesday. This was Tuesday's high, I believe. I've seen this price action before. Yeah. So my dealing range initially is right there. So if you look at the chart I sent in the group yesterday, I was shorting this run right here, and I shorted this here. So I shorted both of these runs to get down inside of this. So let's zoom up and talk about why I shorted that. Maybe that can help. So based on what we're talking about since the start of this call, whenever we get a dealing range form, we anticipate a run back inside the dealing range to push. 50% of the dealing range is right here. So I'm expecting at least a push to here. But there is no overlapping confluence here for me to trade. So this buy, I wasn't interested in. I was interested in this candle being tagged, this right here. On my feed, and probably most other NAS feeds that I've seen, this right here is not an up candle and a down candle. It's actually one big down candle. So I'm looking at it as this is the lowest closing down candle inside this accumulation. When we push, I want my entry to form inside here. So this is what capital.com. Give me 1 sec. Let me look at the next NAS feed so I can show you what I mean. There we go. So on the other feed, what is this? Here. On the other feed, we had 2 candles right here. This was 2 candles. But on my feed, it's one big candle. So I was looking at an entry roughly about 50% of this candle. So eyeballing it about there. It aligns with this. So logically, I'm saying, okay, cool. More confluences would be around this opening price. So I was looking to enter there. This opening price is what they stopped at and then rallied. So once this happened, I was like, I'm not going to buy up here. I'm definitely not going to buy. I can see that the H1 narrative. Wait a minute. Let me remove these drawings. Whew, a close one. Here, high, dealing range. AU next, sure. So with that in mind, as I was saying, I was looking for this candle to act as support and push price higher. Right? So it was clear that this is where it's coming from based on our model. It's clear that it's going to come back to this. But from a precision standpoint, I wanted that price. I didn't get it, so I didn't get this buy. But if you want to talk about why we were bullish or why I would be expecting bullish delivery here, we take a look at the model that we trade. 4 steps: accumulation, failure swing, oppose, and liquidity run. Then our entry forms: accumulation, failure swing, oppose, and liquidity run. And then my entry forms. But again, I wanted my entry a little bit lower, move on with life. Buy side liquidity, highs from last week. I don't even like putting my target so high. I prefer using bodies when I'm using higher time frame because wicks tend to be mainly stop runs, and then that could trip you up. So we have that being the setup. So yesterday I shorted here down because I wanted that run back to buy. So it was a sell to buy. Let me just mention this tip now since we're here. Buy to sell and sell to buy setups are very nice to trade, but if you don't have a clearly defined rules around them, you're gonna crush yourself. My rule: if this is buy side liquidity and I'm thinking sell to buy, I will only encourage sell to buy before we get here. Logical, right? So I'll sell here and buy again before this gets tagged. If the liquidity is taken here, I'm not interested in selling to buying back to that point because the liquidity I was be targeting on a buy side would already be taken. So graphical representation. Buy side liquidity here. We drop, order block created, we push. This fails from a logical perspective. Maybe it creates a dealing range between here and here. I'll sell this, then I'll buy to here. If we make one push, let's say it doesn't create a dealing range and trades to this immediately, and it starts dropping, this is just a sell for me. I'm not looking at a sell to buy anymore because the liquidity here, well, here would have already been taken on that push. All right, so that's a rule. If this fractal is nested on a lower time frame inside a higher time frame run on buy side, then you zoom out and look for where's the dealing range being created. Then you encourage sell to buy. But if you can't see where the buy side liquidity is, you would logically target here. Are you buying this? I'm just gonna buy it and put it where the stops are. I'm gonna take your stops and then we move. So that's it for NAS H1. Buy side liquidity draws up here. Dealing range already framed. We're already outside of the dealing range. The expansion has already started. Let's look at that 1 minute chart. $8 a.m. Not going over a lot of basics in this one because I think we've done a lot of that. NAS is teasing. Is it really? Is NAS really teasing when you can see all of that right there? Liquidity is being built around that. That low and that high. Might sound like I'm cherry picking. I know. Sell side swept here. Hashtag Friday's low. I mean, New York low. So sell side is already swept here. Price is trading down. This is not going to be a buy. Okay. Sell side swept right here, and we pushed higher. This is not a buy. Maybe a buy scalp, but this is not a buy to buy side. When you're bullish and the market has swept sell side, bullish arrays is usually what you pay attention to, right? But in this case, there's going to be a change in the state of delivery happening somewhere around this price action. The change in the state of delivery will run for the liquidity. So if we open in roughly about 50% of this range, if the market is, it's hard to say this without saying too much, but let's do this. 50% of that range. When the market's right here at a particular time of the day, we're looking for which side of the liquidity was already swept. Specifically, which side of this range has been swept. Sell side was already swept. So the run should be on buy side. If the run is going to be on buy side, funny. If the run is going to be on buy side and it's going to start somewhere in here, let's call it 9:30 because equity is open around 9:30. There, here. If the run is going to happen at 9:30, it means they need to accumulate before 9:30. So the run to this high is going to start close to here. That's the time. And then the price is going to be below here, specifically below here. There's that run. Here's my down candle. Let's play devil's advocate. Is this setup higher probability to run here and then shoot back up? Is that high probability? Let's see what you guys say in the chat. No questions, no answers. Somebody says, yes, it's high probability. Why is it high probability? Or why is it not high probability? No, it's not a signal. It's a legit learning experience. Liquidity upside was to the upside was cleared. Not high probability. Based on oil FVG, sell side swept. Whole lot of mixed emotions. Whole lot of mixed emotions, right? Let me check if somebody else replied. Failure swing, stop on dealing range. So there you have it. Is that high probability? No, you tell. No, based on what happened, what's your answer? Everybody's gonna say yes, no. It is high probability. Why is it high probability? Because after the sell side liquidity was swept and the order block was formed, we did not retrace to the order block. Look, order block, we traded above the high of the order block right here. If we tag the exact high, where's that line? Right here. We closed above it right here, initiating CSD. Good stuff that the kids talking about these days. So because this didn't come back, we have to treat this in the same way that we treat here. If we expect that point to get tapped, there must be lows above here for them to sweep. So in order for them to create a low above here to sweep, they don't retrace to the order block and create the lows. All of these lows are intentionally created above that price level to facilitate this. I'll call that hindsight. Yes. Now the liquidity has been swept. Beautiful delivery. H1 target. I think that's what the H1 target, or it's close. I don't remember what we were looking at before. H1 target swept. Game over. Ends meet. This was a nice, a quick 2R, depending on how aggressive you are. 2R could be a lot. We have about 3 minutes left. I don't know if that's enough for another pair, but beautiful, beautiful delivery. Beautiful delivery. Yeah, this is actually bar replay, guys. Yeah, no idea what I'm talking about. DXY daily. Why not? Do I have it here? I don't think so. DXY TVC feed. Oh, it is there apparently. Still navigating my way around TradingView, guys. Where is it? It says it's there. I don't know. DXY. Oh, I didn't add it here. There we go. Bam. 1D real quickly. Clear up all of that. All right, daily chart, daily range. When's the last time a high was swept? Here. We run higher. So here. That's our 16 message in the chat. I forgot AU. Yeah. No. Signals group is too much. I can't. I don't. Yeah. Too much. Dealing range created. Buy side liquidity. Up candles. Daily order blocks. Trade below, retrace. Next day is pushing, coincidentally. Which means the obvious first draw on liquidity is. Did I click it? I didn't. That low. For many reasons. Following the logic that we just talked about. Imbalance of 50%. That would have been your buy to push. Low is now resting above here. When they get here, if they create a down candle here, watch the opening price of that down candle. That tells you they're going to pull and then go higher. I'd rather see a much deeper run. I'd be looking at maybe here. 104. Once you get below 1087, I'm thinking down here. But it's gonna be it for this one. Hope it was fun. And do enjoy the rest of your day, guys. See you in the chat.